So the first thing I want to talk about is business types. Actually, I'm going to skip. I moved my slide and I didn't hit the updated one. Okay, so the first thing I want to talk about is LLCs. Everybody, you hear YouTube, I need an LLC. You got to have an LLC, LLC, LLC. And a lot of people get confused about LLCs. So first of all, LLC stands for Limited Liability Company, right? You do not have to have an LLC to be a business. So let's get that out of the way. You could decide to operate a business just being a sole proprietorship, okay? So I know YouTube University tells us all that's what we have to do, but we don't. Now, the reason that people want an LLC is that it provides a layer of protection between you and the business. Kind of put a buffer between you and the business. So say, you know, your business has a business work vehicle and you have your own personal vehicle, right? If someone were to get hurt in your business or decide to sue you, they couldn't come after your personal assets, only those in the business. So that's what the LLC does, okay? But it's not necessarily required to start. What I personally tell a lot of my clients, if you're not doing something where there's a level of liability, then we can just start out and let's make sure this business is going to be profitable and work before we invest in the LLC, because most states like Kentucky have fees associated with the LLC. So in Kentucky, every year you have to pay $175 whether you do anything with that LLC or not. So if you're not making any money, $175 could be quite a bit to come out of your pocket, right? So there's no reason to do that. Indianapolis, I know some of you are from Indiana, theirs is every 2 years and it's $50. So again, if you're not having liability, do we really necessarily have to have it? Okay, the other thing is people think that an LLC determines how you're taxed. That's false. LLC doesn't have anything at all to do with how you're taxed, okay? So you can be an LLC and be an sole proprietorship like we just talked about. You can be an LLC and be an S Corp. You can be an LLC and be a partnership. You can be an LLC and be a C Corp, okay? So the LLC is literally just the liability protection, okay? So it doesn't have anything to do with how we're taxed. Does that make sense to everybody? Okay. All right, so now we can go back and talk about the business types. Okay, so as I mentioned, the first type is a sole proprietorship. This means you're unincorporated and it's ran by one owner. For tax purposes, the owner and the business are one and the same. So this would be like today, I decide, you know what? I'm good at braiding hair, right? So I'm gonna start doing people's hair, I'm gonna charge, they're gonna cash at me, whatever. I'm a sole proprietor. Even if I never register my business, decide a name, technically if I am earning income, I'm in a business, okay? I'm a sole proprietorship. Now, does that mean that we're claiming the income? Not always, right? But that's what you are. You're a sole proprietorship, okay? For tax filing, you're still going to just file your regular personal taxes that you normally file, your 1040. We've all heard of 1040s, right? All we do is we just add an extra sheet on there called a Schedule C, okay? And the Schedule C is the profit or loss from your business. Has anybody ever heard of a P&L? That's profit and loss. So in the bank, you try to get a loan or anything, they ask you, hey, I need your P&L statement. That's all they're talking about is a profit and loss. So they want to see your income starting out, take out any expenses. What's left is your profit. That's it. That's all they're talking about, okay? So that form goes on your tax return. So let's just say I work for a regular W-2 job. I made $25,000 at my job, okay? And then I have my little side hustle, braiding hair, right? And I'm going to put that on my taxes. After I took out all my expenses, my side hustle made $5,000. On my 1040, I'm going to add up my $25,000 from my W-2, and then I'm going to add that $5,000 for the business that I had, and then I'm going to be taxed on the $30,000. That's basic, minus any credits and all the other stuff, right? The other advantage to this is, what if my business had a loss for this year on the books? Because mileage, things like that might actually make me have a loss, even though I really pocketed some money, right? Well, if that business, same scenario, I had a $25,000 W-2, but my business was $5,000 in the negative, well, now it gets to subtract from that 25, and I may get back more of my withholding. So having a business doesn't always necessarily mean you're going to owe on your taxes, right? It may actually benefit you depending on the situation, okay? On this, you're taxed at 15.3%, which is what we call self-employment tax. So I just explain this to everybody, like, you know when you work a W-2 job, right? We all see on our W-2, or we get our paychecks done, we see what we're supposed to make, right? But then they take out Social Security, Medicare, whatever state we live in, federal taxes, all of those taxes. What people don't realize is the Social Security and Medicare that you see come out of your paycheck, your employer has to match that for every single person that works there. Well, when you're self-employed, they make you pay the whole thing, which is 15.3%. So you get taxed your regular income tax bracket, plus you get hit with that self-employment tax. That's where you hear people say sometimes you're double taxed, right, on that income. So that's how you are if you're a sole proprietorship, okay? This is the form that I was talking about, the Schedule C that would go on your taxes. So it's a profit or loss for business. So as you can see, you would start out here, put your income, and then there's a bunch of different expense categories that we would subtract out, which we'll break down in a minute on some of these expenses you can write off. And then the end is whatever your profit is or loss, okay? The next type of business would be a partnership. So think about it as, like I just said, the sole proprietorship is going to go on your regular tax return, right? Well, if I'm a single girl and me and you, we decide to join together in business, it can't go on our personal returns because we don't file together. We're not married, right? So that's why we have to file what's called a partnership return, okay? The partnership is 2 or more individuals who make an agreement to work together to advance a business. So the partnership is its own separate entity, okay, from the individuals. What happens is we call this a pass-through entity. It means the partnership doesn't actually pay any taxes. Same scenario, we figure out what our profit was at the end. If it's a profit or a loss, say we made $10,000 in the business and we're 50-50 partners. $5,000 is going to flow to each of us on our personal returns. And we'd add it in with our W-2 just like everything else, and we'd file our taxes. In this scenario, because of that, the partnership return has to be done first. So if you have a partnership, that's due March 15th. Whereas our personal returns, when do we have to have those filed by? April 15th, right. So our partnership has to be done a month in advance to give us time to get this so that we can then do our personal on time, okay? So if you set up one of these businesses, a lot of times people, because you know, you got all these websites that allow you to set up a business yourself. And so people come to me and they've set these up and didn't realize they were supposed to file a whole separate return, and now they've already filed their personals, right? So we have to go back and fix that. So always know that has to be done first. If you file an extension on this, then you're probably going to have to file an extension on your personal because you can't do one without the other, okay? The paperwork that you get from the partnership that shows your share of the profit or loss is called a K-1. That's what that's called, okay? Income and draws from a partnership are taxed as the same rate as self-employed, the 15%, 15.3%. So tax-wise, it's the same. It's just we have to do that separate return because we're 2 separate people, we're not connected, right? Now, there are some ways to do it a little different if it's a married couple. We can file what's called a qualified joint venture, but basically we could keep it all on our personal and not have to do this partnership return if they're married. That's the only time that can happen. If it's unrelated parties, got to do this separate return. Does that make sense? Okay. This is what the form looks like. It's very similar to the Schedule C. It's just going to list income, minus out your expenses, whatever's left, that's your profit, okay? The next one is an S corporation, okay? All business types, a sole proprietorship, a corporation, or a partnership, they can choose to elect to be taxed as an S corp, okay? This allows the business to pass all the income and loss deductions to the shareholders or owners. The form we filed for this is called an 1120S. This is also what we call a pass-through entity. So again, the S corp doesn't pay any return. It's due March 15th, same as what we just talked about. The shareholders get their percentage on a K-1. Now, I know a lot of people, this is another one of those YouTube University things, right? Every video says you need to be an S Corp. You can save on taxes if you're an S Corp. Be an S Corp, be an S Corp. Nothing is black and white like that, okay? Everything is situational. So if you're not again, we talked about, you're gonna have to file a separate S Corp return, then you're gonna have to file your personal return. When you're an S Corp, you have to do payroll to yourself. So now you gotta pay payroll taxes, file quarterly taxes. There's a whole lot that goes into that. If you're not making any money, why in the world would you then set yourself up to have to pay all of this extra stuff and then pay me to do it for you, right? No, that doesn't make any sense. So we should definitely look at it case by case before we decide if this is what we need to do. Yes, you can save on taxes because as an S Corp, that 15.3% we talked about for self-employment tax, it goes away. All you get taxed on for the profit is just your regular ordinary income tax bracket, whatever you fall in, 10, 12, 22, whatever. But again, you have to do payroll. There's a lot that goes into it. So what I personally suggest with my clients is we look at it, we see where you're at profit-wise, what's your plan for the money. If you're planning on keeping the money in the business and keep reinvesting it, this may work. But if you're planning on every year, whatever you make, trying to pull that out to pay your bills and do this and that, that's probably not the way we need to go. If you're not good at commingling, right? If you're still trying to pay your personal stuff out of the business bank account and everything's mixed up, then no, we're not gonna do this. So for mine, you gotta show me a couple years of being organized and doing things the way I tell you to do it, and then we can talk about maybe doing some other things. So there's levels to it. So when you watch these videos online, everybody's great. It's great people are sharing game, right? And telling us different hustles and different things that we can do, but nothing is black and white. Everything is based upon the situation, okay? All right, that's the S Corp return, same thing, income minus expenses, there it is. We already talked about the LLC. Now we'll talk about the different types of taxes that we pay. So we all know we have personal income tax, right? On our wages, tips, whatever, self-employment. For 2024, the tax brackets are gonna be between 12% and 37%. So you can Google those are public, but it shows you like if your income falls from this range to this range, this is your bracket. This range to this range, this is your bracket, okay? Obviously, the more money you make, the higher your tax bracket. In Kentucky, our tax rate is 4% for the state. You know, there's some states, like the people in Texas in the back, don't have income taxes. Florida, no income taxes for the state. But every state is different on what they tax you on. And then we talked about the self-employment rate, which is the 15.3. Sales and use taxes. If you're selling something like clothes or any types of items where you're retail, you're supposed to be charging sales tax, right? And in Kentucky, it's 6%. All states are different. Most of the states, like Florida, Tennessee, that don't have income tax have very high sales tax. That's where they get their money from. Because they know on income taxes, right, we're gonna find ways to have deductions and not pay them our money, right? But we have to buy stuff. There's no way around that. So Kentucky's become hip to that, and now they've started adding service businesses to the sales tax. So they're dropping our income tax rate, but they're adding all this extra stuff. So now massage therapists, photography, personal trainers, tattoo artists, residential, commercial clean, all these people now have to charge sales tax. Eventually it will be pretty much everything we do in the state will charge sales tax. And this is new, and a lot of people don't know it. And so I know at least 3 times a week I'm having to help somebody go back and file these returns that were missing, because I don't know about your states, but in Kentucky, they allow you to go on our one-stop portal to create your business yourself. Like you can just go online, file it, it takes you to the IRS site to get your EIN number. Well, people just answering questions, and then you create these accounts, which creates liabilities. So you're supposed to be filing quarterly or monthly, and then you end up getting in trouble because you didn't file it, right? In Kentucky, when you don't file it, they just file it for you, and they do $1,000 per period and say, that's what you owe us. And then people get these scary bills in the mail. I had a guy yesterday, $30,000 bill that he got in the mail for not filing sales tax. And he just created this LLC 3 years ago and never did anything with it. So we got them to adjust it at 0 now, but we had to go back and file those missing returns and let them know, no, we never did anything with this business. But if you didn't have someone to call, you think you owe that, set up a pay agreement with them, and here you're paying these people back money that you don't actually need to pay them, right? So always ask. Let's see. Okay. Other business taxes that we pay is local occupational taxes. So where, again, same as when you see your paycheck, if you work here in Louisville, you see Louisville taxes come out. If you work in Atlanta, you see Atlanta taxes come out. Wherever area you work in, you also have to pay those taxes. The same applies when you're a business. At the end of the year, whatever your profit is, you owe them that same percentage on your profit, okay? Annual reports. Every year you're supposed to, if you have an LLC, you have to keep renewing that to keep your LLC in good standing. In Kentucky, it's $15. That was where I was talking about with Indiana, it's $50. BOI. This is a big one that I wanted to make sure I hit here because this applies no matter what state you're in. This is something new that they just passed in January. It's called the Beneficial Ownership Information Report. It is not a tax return. You don't have to put any numbers. You don't pay anything. This was put in place to bypass fraud. So it's the same people who watch us all, our banks, for like money laundering and everything. You have to just go on there. If you have an LLC or up, so that's LLC, partnership, S Corp, C Corp, you are supposed to go tell them that you have a business, who the owners of the business are, and what your addresses are. And there's steep fines if we don't do this, like thousands of dollars. So if your business was started before January of 2024, you have up until January of 2025 to get this filed. Any business that started after January of 2024, you only had 90 days from the date you set your business up to get this filed. So for anybody here who has a business and hasn't done this, let me know. I will help you. Because again, there's no fee for it. I just need to send you the link so that you can actually get this taken care of, okay? And then you might have monthly or quarterly payroll filings if you file payroll. All right, so now this is the good stuff. So business deductions. What can we actually write off when we're a business, right? I tell people all the time, if you do it for your business, I can find somewhere to put it, right? So pretty much if it is related to your business and you are doing it for business, we can write it off. So all of you who traveled here from somewhere else, this is a business trip, right? Because you came for a conference. Now you might have some fun. You might have to do some good eating out and doing other things, but your primary reason for being here is for business, correct? So this is a write-off. Contract labor. If you pay any one person to do work for you more than $600, you're supposed to 1099 them, and you can write that off as contract labor, okay? Insurance. So if you have liability insurance, vehicle insurance, which we'll talk about vehicle expenses in a minute, any types of insurance, that's deductible. Legal and professional. So if you're paying me to do your taxes, or the guy that was here for the legal shield, if you sign up for that, that's legal and professional, right? You can write that off. Rent or lease. So if you have an office space that you rent out, you can do that. Now this line is not for like your home rent. That has to go on a whole separate thing because we have to figure your square footage for your office space and that. But if you have an actual office, or say you have a storage unit, for those of you who sell items, merchandise and stuff, right? Maybe you have a place where you rent each month to store it. That is deductible. Or if you rent vehicles, like say you needed to rent a vehicle to go on a trip or do whatever, same thing. Repairs and maintenance. Again, this is repairs and maintenance for like your actual office space, not your car. That goes in a separate line. Meals. So during COVID, they let us have 100% of meals, but it's gone back down now to the 50%. So for my clients, those that don't do like bookkeeping and stuff, when I'm going through their bank statements, I know that most of those meals are probably not business, right? But they're using their business bank account or business card for it. So I usually take 50% of whatever is on the bank statement, and then when I put it on the tax return, they're going to get 50 of the 50. And I figure somewhere in there, you're gonna come out close, right? Now, technically, you're supposed to keep your receipts, you're supposed to document who you're meeting with for the meals and all that good stuff, but just bare bones basic, no, you're only gonna get to use at least 50% of those meals, okay? Taxes and licensing. So again, that $175 I said you pay every year for your LLC, that you can write off on the tax return. The local taxes you pay, yes. You can't write off IRS taxes on your IRS tax return, okay? So if you're in a payment plan with them for previous years, they don't let you double dip like that. You can't write it off, okay? Home office deduction. So again, a lot of us start our businesses from our home, especially COVID. Now everybody's realized we can work from home, right? So if you have a home office space, it's supposed to be a dedicated office space, okay? Now, that doesn't mean it can't be a bedroom and have like a guest room, but the area you're using of that room, you need to have a desk or, something dedicated. It could be your garage. Maybe that's where y'all store all the equipment. If you're like a lawn care guy, you might have mowers and all your stuff out there. And we just have to look at the square foot of your house, total square foot, and then the square foot of the area you use for business. We divide that, whatever that percentage is, then you get that percentage of your mortgage or your rent, your utilities, if you use utilities for that room, right? And any types of repairs and maintenance, anything you do to the house, we get a percentage of that based on that. Now, if you do something just to that room or that area, you can have that at 100%, okay? So that's home office deduction. Now, vehicle expenses. There's two ways that you can take off vehicles, okay? What we call actual method or standard mileage. So I'll start with standard because that's the easiest, right? Business portion of mileage driven for the tax year. So for 2024, that's 67 cents per mile. So for those of y'all that drove here, put in the map from your house to here, how many miles that was, multiply it by 0.67, right? For people who drive a lot for work, this is probably their biggest deduction on the tax return, okay? Because you're everywhere. If you're doing lawn care or something where you're driving all around, before I had my office space, I would go to people to do their taxes. So I got my car brand new and I probably put 30,000 miles on it in the first year because I was just driving everywhere and it takes me 45 minutes to get to work, so mileage. Now technically, let me caveat that, you're not technically supposed to count from home to the office or home to your first job of the day. But then from there, if you go to the bank, if you go here, then you can. Because if you choose to live 45 minutes like me from where you work, that's a choice, right? Okay. But everything else counts for mileage, okay? Or actual. So the man that was here earlier, he talked about the word depreciation. Do y'all know what depreciation is? Has anybody heard that before? Right, so basically the IRS has a table where they figured up what they call the life of certain items. Vehicles, they look at as 5 years, okay? So they say your typical vehicle lasts about 5 years, okay? So say you bought that vehicle for $50,000, we would divide that by 5, and that's the amount you would get to write off each year for that vehicle, if we go with the actual method. Now, there's whole lot of other tax laws in that. That's just a very basic thing. For vehicles, depending on the weight, they allow us to take a larger chunk of it up front, okay? So for 2024, I think it was like $20,800 was the max depreciation you could take first year for a vehicle, okay? So my rule of thumb is, if a person goes out and buys a brand new work truck or a brand new car, that I'm probably going to do actual, because it probably costs at least $30,000, right? If it's just an old car they've had for forever or whatever, I'm probably gonna do mileage, okay? Now, if we got multiple cars running, I'm gonna do a little bit of both, right? The older vehicle, I'm gonna take mileage. The other vehicle, I'm probably gonna do actual, because that gas that's really for both, I probably can go ahead and kind of double dip a little bit here, right? So I'm gonna kind of play with it, but it depends on the situation. Again, nothing's black and white. But once you pick a way on a vehicle, you have to stay with that way. So you can't flip-flop. You can't say, oh, I'm gonna do mileage this year and the depreciation next year, and back and forth, back and forth. So once you run out of the depreciation, then the only thing you're still taking on that vehicle is the other actual expenses, gas, oil, repairs, those types of things, okay? Parking and tolls and all that stuff you can take either way, but it's one or the other. Most good tax preparers or software or whatever, first year are gonna figure it both ways and see which one's gonna give you the bigger deduction, and then that's what we roll with, right? But regardless to whether we take standard or actual, we are still supposed to be tracking our mileage. Because how do we know what percentage of gas is for work and what percentage was personal if it's not 100% work vehicle, right? We still have to go by the mileage. It does not have to be a super detailed log. I've been on IRS audits. They will take a notebook in your car where you just wrote down here what your mileage was starting, what your mileage ended. Or you can write down where you're going and then just do the math later, right? Oil change receipts are a good way to keep track of that, right? So I try to send out reminders in January, everybody write down your mileage, where are we at right now? And then in December, hey y'all, write down your mileage so we know where we are, okay? All right. You must own the vehicle. So it can't be the girlfriend, the baby daddy, the sister, cousin, uncle's, auntie's vehicle. It's gotta be your vehicle, okay? All right, yeah, so 24 is the max depreciation for vehicles under 6,000. That's another social media, YouTube University. Oh, buy the vehicles. Make sure you buy a vehicle over $6,000. 6,000 gross vehicle weight. This is true. After over 6, actually over 14, it's not even capped at all. Like you can take the whole depreciation if you wanted to. But if you can't afford that vehicle, don't just do it for tax purposes, right? We still want to make sure it's reasonable, okay? Okay, so this just breaks down my services on the things that I provide. So bookkeeping, payroll, financial statements, like you said, individual, corporate tax. I do free prior tax review. So if you did your taxes yourself on TurboTax, or you had somebody doing them, but you're not sure if you trust what they did or understand what they did, I will review it. That's free. Only time I'll charge you anything is if I notice there's things that need to be fixed, and then to amend it, you know, it would be all right. Tax Academy. So I just started this last year. I have a virtual tax academy. So no matter what state you're in, if you've always wanted to learn how to do taxes, I will train you. It's online, you self-paced, you can go through it. We do Zooms because I want to make sure you know what you're doing. But I check all your returns to make sure they're good before they actually get transmitted to the IRS. I provide you with software, everything. So if that's a side hustle you may be wanting to get into, definitely reach out to me. Business registration. So like I said, after this, I'm going to pull a name based on the people who signed up. Somebody, if they have a business that they need registered, I will do the whole thing. LLC, Secretary of State, get your EIN number, whatever, for free. Or do your taxes for free, one of the two. Software training sessions. So some people have QuickBooks or Wave or things like that, but they don't know how to use it. They're like, I have this, I connected my bank account, but I don't know what to categorize this stuff. Like, what am I supposed to do with this? I'll help you with it. So we can do a little training session. I'm year-round. I didn't know that this was really a big benefit until I started talking to people. And a lot of these people, again, use taxes as a side hustle, not their full-time gig, and they're only open through April. And after that, you can't find them. You can't get a hold of them, nothing. And the IRS works year-round. During tax season, they're just paying. They're busy. In the summer is when they start pulling the actual returns to double-check stuff. So in the summer is when you get letters from them saying, hey, we see you left this W-2 off, or hey, you owe us this amount of money, and then you can't find the person who prepared your return. So having year-round support is important. And then virtual options for all states. Recently, I also decided to add additional financial services, which is life insurance. So affordable way to protect your family financially. In the event you're not there to care for them, life insurance can also help you while you're living. I honestly decided to get into life insurance because I didn't know this. Once I started learning it for myself, I was like, why don't they tell us, and I say us as us, these things, right? Like, why don't they tell us that you can actually use it? Most of these companies, like Gerber, and they kept their companies running through the Great Depression off of life insurance policies. They just cashed out their life insurance policies to float their companies. So we need to learn these things. So I did that because I wanted to learn it. And then retirement options, financial strategies with index, universal life, and annuities. What time is it? Okay. All right, I think we got a few minutes. Okay, so this is part of that, and I just wanted to go through this real quick with you guys. So there's 3 ways that money grows. So we're going to use a 50-year-old woman who had, say she had $300,000 to invest. She comes to me, she said, hey Toya, I'm 50 years old, I want to retire in the next 10 to 20 years, I need to make this money, make some money for me, right? What can I do? So the first option is she could put her money in what's called a fixed account. So examples of fixed accounts are like your bank account, CDs, bonds, things like that, right? The advantage for fixed accounts is that they're safe, right? You can't lose your money. If you go put your money in the bank's not going under, and if they do, they're FDIC insured, right? They got to give you your money. But the disadvantage is that there's slow growth with fixed accounts, right? Most banks aren't giving us any interest rates right now, right, at all. So this lady, if she put it in, and this is based on the S&P 500 over the last 20 years, okay? So if she put it in 10 years, she'd have $403,174. If she kept it in the full 20 years, she'd have a little over $500,000, which is not bad, right? She made some money. She'd have that to live on for the rest of her life, right? But the second option that she could do is a variable account. So most of us have these types of accounts. That's your 401ks, 403bs, things like that, right? The advantage for these, and this is stocks and mutual funds too. The advantage for this one is that you can get a high rate of return because it's tied to the stock market, right? The disadvantage is there's higher risk because what happens with the stock market? We see it on the news every day. It does like this, right? So when the stock market crashed several years ago, people had this dollar amount in their 401k, woke up the next morning, and it was what? It's gone, right? So that's the disadvantage to that type of account. So you can make money. So look, 10 years, she was already at 456. In 20 years, she had over $1 million. But that's hoping that that doesn't tank, right? Okay? So the last way that money grows is indexed. That would be like our index universal life. If you ever heard people online talking about infinite banking, that's what they're talking about, the index universal life. Or fixed index annuities. Okay? An annuity is where like you can put your money roll over, like you could roll your 401ks or things like that into annuities, okay? The thing with this is it's like the best of both worlds, right? Because we take the safety and security of the fixed accounts, but the high rate of return, like the variable accounts, because it's tied to the stock market, just like the variable, but it's backed by insurance, so it's guaranteed. Can't lose your money, okay? So in this case, 10 years, she had 760, and then in the 20 years, she had over $2 million. And that's $2 million guaranteed. The other advantage for this is that it's income for life. So you can turn these annuities into like a pension. You know how companies used to give you a pension? And that gives you a set amount of income every month for the rest of your life, right? So these are again, I primarily do taxes, but once I learned this, I was like, this ties into what I'm already doing, and it makes sense, like, for our people to know about these things, because other people have been taught about these things for forever. So I just want to make sure I got that in for you guys. Here is my contact information. I think a lot of you grab my cards, but you can scan the QR code that takes you right to my website. Please follow me on the social medias. You can get to them from my website as well. And then I'll open it up for questions if anybody